Good morning here, traders. Britton Brown with Trade Hive. Just going to cover the NQ pre-opening playbook. Obviously, NQ is a little bit under pressure. Looks like they're going to go drive down to that level uh, from yesterday's lows. Currently, they got to get through this little zone right now at 25.3, call it 390 down to 350. But if they can get some acceleration, I would guess that that's probably the move. A couple of things before I get into the charts. When I look at the Qs, right, I want to know where gamma traders are, where the zero DTE market makers are playing. And so I'm going to give you a wide range in the QQQ. Right now, the battleground is right around 620. 600 is the put option wall. And then up above 635 is your call option wall. So right now, market makers are in that transition where they're buying dips and selling rallies. So they're trying to contain the volatility here. So I'm just going to throw that at you, and then I'm going to switch over here, and we're going to kind of get into the charts, give you a good feel and read for the day, and I'll talk a little bit about what the playbook is, and then maybe perhaps kind of how I approach this market as we get going. So let's get into the charts. I'm going to pull up the daily and walk you through this. So basically, we have a large consolidation balance. I've been talking about that for the last several days. Hey, know where you are. We don't really have any kind of new consolidation box, but if you look across the board here, we're capped on the high side, we're capped on the low side. The institutions are buying the dips, and they've been selling those rallies. That is normal for the institutions. I still think that they're going to protect some of this, but they will let you go. You know, if the market is on the downside, we've got the 9 EMA below the 32 in most of these charts here. And so that's going to leave credence to selling rallies and taking risk off the table. And that's pretty much been their MO. So we are below the point of control on the daily. When I look at the white, the green, and the red trend lines, the red is the monthly, the white is the daily, the green is the weekly, and we are below those. The 9 EMA is fighting with that 32, and so the trend's not fully broken, but the momentum has been damaged. Markets rotating inside a higher time frame balance. Failure above prior highs confirm an auction rejection. So, you know, again, we keep seeing we're in an auction format, right? That's what trading is. We are in price discovery. Anytime we got up above that 26,000 level, we saw sellers come in. We're losing steam, right? So not yesterday, but the day before, which I think today is Wednesday. Yeah, Monday, we saw this great P shape on the volume profile. Market tried to extend that, which is exactly what we were anticipating, hoping that this market was going to turn around and the bulls would shape up, and we lost that yesterday right from the get-go. We could see the struggle overnight, and once we broke that, basically flipped everything to the downside, and now we are just rotating back on the lower end of this range. So this is going to be interesting today, I think, as they press this. Let's talk about probabilities on the daily side. Balance rotation, range trade, 45% is the probability there. 30% is downside towards the monthly support, and then strong upside acceptance and trend repair sitting at 25. So we're, you know, when you look at the daily, you can look at the chart. It's pretty self-explanatory. We are just bouncing around. If I was going to draw a line of support, it's going to be down at that 25,000 level, and then, of course, 26,000 level. And that is right in the institution's wheelhouse. Institutions do not play for a 100 handle range or a trade. They're playing for 800 minimum to 1,200 is their norm or more. And so when we get down in this zone here, you're going to see institutions probably come in and defend the overall bull trend. Could it get sloppy and messy? Absolutely. We have some targets well below this market. But for the most part, if you look at this, I'm going to switch over to this 4 hour. We are sitting below point of control. we have that gray box at the bottom, the gray box at the top, and we're just down at the bottom of the range, right? We're right back into that zone when you look at it, and we're trading below 25,400. As I mentioned yesterday, we are in discount, right? So when I say that, understand this is where institutions can get sloppy, but they tend to protect and get long when you get really bearish. So keep that in mind. We are above the monthly trend line on the 4-hour. We're below the white and green trend lines. That's your daily, that's your weekly type of trend line. The 9 EMA is below the 32. And with the 4-hour, this is the big driver. The 1-hour is more volatility aspect trading. The 4-hour is really what we've been trading off of. You can see that on the charts. Market acceptance below value. Sellers are going to defend the rallies. Any move into a point of control, 25,700, is likely the big decision area. When you look at the probabilities, a rotation back to the 4-hour point of control has got a 40% probability. That's our highest one. And just like the daily, the failure at the point of control continue lower, sitting at 35%, and a strong reclaim and upside continuation is only at 25. That's actually a pretty surprising number. You'd think things would be flipped right here, and the quant program is just not seeing it. I'm not seeing it right now in structure of the market. So current state of the market in general is just be cautious in this zone. Let's flip over to the 1-hour, and then we'll take a look at the 5-minute. Again, you know, it's when I do these things in the morning, I post the playbook first if you want to grab that and kind of review it as I'm going over it. And then things obviously change, which is why I stopped posting the 5-minute on there, because that's really primarily what most retail traders are trading off of. The only time institutions look at a 5-minute, and it's not very rare, very often, is just as an entry side. And honestly, that's almost too small, but those are more your desk prop traders that are looking at something like that to engage in the market. On the 1-hour, this is getting pretty interesting. We have this gray box at the bottom of the range. Point of control sitting up above 25,548. And so keeping things in context, right, we have two options here. We could see the market fade down and turn this into a red box and shoot up and head back up to this main green box. This is really what we're trading off of, traders. We had no problem, and I said it yesterday, if we can't get to the very first projected upside target, then this market is definitely showing you we have no problem going down 290 points to a downside target. When I see a green with a red box right here, this is high volatility. This means if you're a Wyckoff trader, right, we have consolidation across, we have a try down, we have a try up, we have a big move down, we make it all the way back above that fair value. That would be kind of like point of control if you're looking at value profile. We get up here, we stagnate, and we get smoked again. So that's the problem we're dealing with. Now, when I see a gray box at the bottom of a range, most of the time, just like when we saw the gray box at the top and the bottom of a 4-hour, those are launching pads. Now, if this market were in a gray box to head down on the 1-hour and continue down, and the fair value of this gray box holds the rally and dumps again, that is not a great sign. That means we have much lower targets for the most part that are going to be in play. That's when you start looking at the 600 put wall as an area of focus for those market makers. You know, we're under VWAP. This is getting pretty exciting. I said yesterday, sometimes the hardest trade, the best trade is the hardest trade. And down here, I think they're really going to test your mettle. But, you know, it's the NASDAQ. You know, this thing jumps all over the place. Just when you get bearish, the thing rallies 800 points in about an hour. So, you know, keep that in mind. This is all about risk today. With that said, we'll take a look. Oh, probability-wise, range, acceptance, chop. That is your highest probability on the 1-hour right now. A rally failure, box flips red on that, meaning they try to push it up, it rejects, and then we turn it red. You'll see a nice target down below. I would expect at the very minimum, let me just draw this if you'll give me just a second. At the very minimum, your downside target, if we go up and we get above this, is going to drive this price down, and then a rejection above that box. At the very minimum, you're looking at 25.1, call it 25.200 is going to be taken out. So that would be the ideal situation. I'd love to see that play out. Again, I don't care which market this goes. It's not healthy for my funds, but as a trader, I love this stuff. So the playbook summary, overall, the market's balanced to bearish right now. Sellers control the 4-hour structure. Buyers must prove acceptance above the value. If not, then I'd be selling rallies. I'm going to expect two-sided trade, so I'm not going to be trend chasing anything. Let me kind of cover real quick, if you'll allow me to. When I'm looking at this, I'll kind of share how I'm coming at this particular market. Let's talk about the big picture for a second. What changed from yesterday? Yesterday we had major liquidation from highs, full day down auction, strong acceptance lower, new value forms much lower, EMAs rolled over, trend shifts intraday, and we end up we go from a P auction scenario on value profile to a B auction day. That's bearish acceptance. Doesn't mean, just like yesterday, that was a great looking chart for the bulls and they just smoked everybody, which is why I think we saw such heavy buying on the dip buying on the very opening, and then this market just got absolutely hammered. Overnight did not reverse the cycle. We built a tight balance. We're inside the prior day's value. We have no upside acceptance. Matter of fact, while I'm doing that, apologize. I'm going to flip over here. Sorry. We had a failed pop rejection, and we dumped back into value. That's a bearish digestion, not a recovery. And the translation basically is market sold hard, paused, did not repair, and it's still weak. It's a classic continuation structure. So again, I gave you the playbook of how I look at things from the perspective of Wyckoff, and now I'm really just giving you my approach to that and what I'm seeing structurally coming into the opening. So we now have primary value sitting at 25,420 to 470. That's, to me, is going to be home base. We have upper supply rejection sitting above that 4,6,500. Every attempt for me getting up into this level is going to be a sell on rallies until proven otherwise. And again, I'm not just saying blindly come in and sell. What I'm saying is look at the structure. I'll probably get on for a little bit and call some scalping for you. If you've never seen me do that, I think you're going to find it fascinating, because I'm going to talk about who's in control, who's getting trapped on both sides, and how I'm structuring my scalping techniques based off of stops. I typically 10 to 15 points in the NASDAQ. When I make a trade, that's my risk. It's preset, and then I will either take that trade quickly, or if I have momentum, I will let that thing ride, and try to get a bigger trade out of, say, 20 points, 15. Typically, it's a 1-to-1 or a 2-to-1 type of scenario for me when I'm scalping. So I'm looking for 10 to 20 points. But if I get the right scenario, I'm going to let that run, and sometimes those will turn into 100, 200, 300-point moves. So keep that in mind. If I come live, just follow that. Might want to like and follow the damn channel, I guess. Let's talk about, I talked about upper supply rejection, lower liquidity pocket, that 310, 350. That's where we're trying to get to right now. I did see some sellers come in approximately 715. There's a seller that sold about 100 contracts down at 381.25. He's a little bit underwater, and we have wicks on top and we have wicks on bottom. So this is really kind of your fake out move. But I think that they're giving you a little bit of direction pull when you see guys coming in and selling solid lots down on the lows. They will let it come up. They're not worried about it, and then you'll see more of a momentum down through that trade. So, and that's on the micros, by the way. Let's see what else. Major prior value yesterday, that 550, 600. Heavy supply above that. You're going to see market makers looking at a call wall right there. So that's going to be an institutional unload zone. Institutions are not going to be looking right now for 26,000. The risk managers will be saying, hey, let's get some more risk off the table. This market is injured until proven otherwise. So again, here's my diagnosis for you. There's no longer a P in the value profile. This is now developing a B auction, bearish auction. Format Y, we have lower value accepted, failed repairs, overnight balance below the prior value, lower highs, EMAs are stacked down. Again, institutions, the desks are going to look at this, rallies or inventory to sell. So what's the most likely scenario from my standpoint today? Highest probability, I call it 55%, is range, failed rally, breakdown. So, open around this 400 area, get into a chop session, push into the 470, 500, reject, sell down to 330. This is a textbook continuation short, your bread and butter. If that's the type of trade you like to do, that's my bread and butter. So that's why I say that. Scenario B is about a 30% probability. It's a slow repair. Range day holds above the 450, accepts above 500. Value shifts up. Right now, it's just unlikely. But you never know, right? It's just going to, I think that requires strong macro news. And let's see what we've got on the books when we're looking at the macro news scenario. Anything that's going to, and I apologize, I usually look at this before, but I was a little bit behind the 8 ball today. We have a U.S. S&P composite at 845, services PMI final coming out at 845, ISM services PMI coming out at 9, ISM services prices paid at 9, new orders are coming out at 9, services, that's the catalyst. So keep that in mind. So what am I marking on my chart? Sell zone primary 460 to 500. This is my area, as I mentioned. I want to be looking at opportunities to get short when the market presents itself as that short. I want to see buyers get caught there, and I want to see sellers come in and commit to that momentum. And that's why I say if I go live, I will call that out for you. Balance pivot is that 25, 430. That's kind of the decision line, the line in the sand for me. Above is going to be neutral. Below is going to be bearish. That breakdown targets 310, 350 zone. That's a liquidity magnet if you're looking at this market. And my emergency support is going to be that 25, 220. So I hope that helps you out. I wish you all the luck today. I think it's going to be an exciting day. I'm not sure tomorrow. I'm traveling. I got to go down to the farm for a few days. I might try to get this accomplished. I won't have all the technology that I'm working with here. Hopefully this sounds good. This video looks good. The format's decent. If you see anything you don't like or you think I should change, let me know. I've got a lot of stuff that I can implement for you. But I will try to get some sort of a video done. I will definitely try to get my playbook done for you. Global macro review last night. That's on the website. The playbook's there. So if you want to see those probabilities, go grab the playbook. It's tradehivecommunity.com. And let's have a great day, guys. I think it's going to be an exciting day to trade. And I will see you on the other side.